Good morning, San Diego. Another great show lined up for you. We just followed a week of great radio shows every night at KCBQ, 1170 a.m. at 6 o'clock. Now we're going to bring this information to you. We're going to educate you today. We're going to empower you. We're going to engage you to do something about it. Here comes another episode of The American Dream. I go to battle for you every day to combat the nonsense in the mainstream media. They're more interested in sound bites and sensationalism. I'm interested in the truth and being your consumer advocate. My ultimate goal is to help you win in any marketplace, and I'm bringing an edge in the real estate and financial game. My name is Craig Sewing, and this is The American Dream. All right, let's loosen up the coat here. Make for a great show. We got a lot of great guests joining me here today. Really excited about our financial and real estate elite team, committed to delivering the timely truth of what's happening in our marketplace, and also really being a resource for you. Many of these guys and gals are featured on our radio show this week. As a reminder, I host a show on 1170 a.m. KCBQ, weeknights at 6 p.m. My positioning on that show is as a consumer advocate. There's enough 24/7 news cycle, mainstream media out there regurgitating all these opinions. What we try and do with our show is actually deliver something of substance for you, and again, be that resource for you, just like we're going to do here today. And if you have any questions with anything that myself or any of our elite experts have to talk about today, then please join us online. Go to craigsewing.com. You can follow us on Twitter, Facebook, all that fun stuff. But most importantly, there's a contact form. If you have those questions, hit the contact form. It comes directly to me before my head hits the pillow, so make sure you do find us there. Also, if you're out on the town this weekend, make sure you stop by a newsstand, pick up our new release of the Pacific Magazine. They're talking about Comic-Con and the Gay Pride Parade happening in Hillcrest, and we have our own piece about what's happening in the real estate market with some of our elite there, and also I speak specifically to the VA, so make sure you pick that up and read it, and certainly love your comments anytime you can on Facebook, Twitter, or our website, craigsewing.com. So big week as far as reports go. Let's take a look at those real quick. So last week, pretty mild week. There wasn't much that really happened. In the absence of news, we saw a pretty stable market. This week, we saw a bunch of major reports that came across. Retail sales didn't turn out so well. Producer price index, consumer price index, these are measures of inflation. The Beige Book came out this week. Also, housing starts, building permits. The Union Tribune showed that we've seen some appreciation in housing in San Diego, so good news in housing reports. All of these are going to be posted up to craigsewing.com if you want to get your hands on these reports, see what happened, and see as it pertains to your 401k or your biggest investment with your real estate. Quick video I want to pull up from CNBC this week. This is talking about what would happen with the Federal Reserve and rising interest rates.
I think we need to get back to a more steak and potatoes, mundane, less volatile form of central banking. We are not in a crisis. Janet Yellen and Ben Bernanke still treating the economy as though it's in crisis. Equity traders don't seem to be too bugged because they know in the end, what's in the New Yorker that I've read, easy money will outlive any types of headwinds to the economy, and I think that's what stock traders are looking at.
Well, you're suggesting that the longer the Fed waits to raise rates, the harder time the market is going to be able to digest that, and also the dangers of inflation coming into the picture down the road. Is that what you're putting forth?
I think you've just listed two unintended consequences. I think that the litany of unintended consequences is much larger, the list is much longer, and the ultimate questions about how it turns out are much more vague. In the end, this isn't what the Central Bank of the United States was created for 100 years ago. It was supposed to be a nudger.
So that's from CNBC. We try and localize everything to the San Diego marketplace. I always say there's the economy out there, and then there's the one in between your own ears. And that's where I really want to help you. Our top financial analyst, this guy is an author. He has his own radio show on KFMB 760. He's regularly featured on our radio show. To comment on that video, we're going to bring in David Reyes with the Reyes Report. David. Good to have you on this side of the studio.
Yeah, that's right. It's a little unusual.
Yeah,
so all right.
Well, we got more time with you today. Usually do the Reyes Report, but I want to go a little bit deeper. So you just heard on that video from CNBC, you heard, is the economy in a crisis? You heard things like inflation, interest rates. These are a lot of hot button items, vocab words that are being thrown around a lot about the economy. What do you think? What's the pulse of it?
You know, the pulse of it is that, I agree with a lot of what was said, actually, unusually. I don't agree with a lot of what CNBC has to say, but the point is that yeah, I mean, we're kind of past the crisis mode. And I think the only thing that's happened with this, the QE is raised asset prices, such as home prices and the stock market, obviously. So yeah, you do run the danger. The Federal Reserve is now going to stop the bond purchasing in October of this year. They're talking about raising interest rates next year. So I think the sooner we get rid of the old QE and tapering, probably the better. Well, so we can see what the real economy looks like.
Yeah, we have a stimulated economy. Right?
Yeah,
so
for sure.
That's what you mean when we're trying to see what the real economy looks like. But I remember you were on the radio show about 3 to 4 months ago, and you talked about how good news is becoming bad news, and bad news is good news because the market's reacting in the opposite direction because of the fear of the loss of that stimulus. Now you have Janet Yellen, who's tapered down the bond buying program. Correct me if I'm wrong. 35 billion a month. In October, they're actually looking to completely do away with it. Let's check out a video real quick, specifically on QE3.
The Federal Reserve minutes from the June meeting saying quantitative easing likely to end in October with a final $15 billion reduction. There was some debate, would it be a 10 and a 5? In this case, the Fed saying we're likely to do a 15 in the last month of October, but that has no bearing on policy or when they'll raise rates. Participants did debate strategies for normalizing policy. This exit strategy discussion, the minutes say, implies no immediate action or no change at all to the plan that they have enunciated. Now, the Fed continued to announce the Fed. Here's the, I don't have a monitor there. There we go. Thank you very much. The Fed's exit strategy. This is not agreed to. It's general agreement out there. The Fed funds target.
So let's talk about what I think is confusing a lot of people.
Yep.
You have the Fed and QE3. We just talked a little bit about that. So they're going to taper this thing down to nothing in October. Yep. But that's going to cause more rates to rise, correct? But then you hear them say, when's the Fed going to choose to increase rates? Can you explain the difference between the rates we're talking about here?
Yeah, I mean, they thought rates were going to rise this year, and rates have actually kind of been flat. You're right. Everybody did that. You're not alone. I mean, that was the consensus, but kind of the herd mentality, go the other way, right? But the point is that rising interest rates are a lot different than ending the tapering or QE3.
Sure.
There can be an indirect relationship, but the economy has to basically cooperate. And that's why, Miss Yellen is giving herself such a huge leash with unemployment numbers. I mean, it was 6.5%.
It seems to be
now it's 5.5%.
Moving bullseye.
Oh yeah, well, because you can't. She doesn't have a lot else. No more, bullets in the holster, as they say in the Fed. So the only two things she really has to work with is inflation, CPI, and also unemployment. So to answer your question directly, it's still an unknown relative to what's going to happen at the end of QE, the end of tapering, and that space between there and really truly increasing interest rates.
So I'm watching this show. David Reyes is a smart guy. I'm trying to figure out, well, what does that mean to me? I know we've thrown around a lot of big words already, and we're only 5 minutes into the show. But why should I care? What does it mean to me? Are there things I should do? I know that the market has gone 32 months now without a correction.
Correct.
Right? The average is 18. I learned this from you. So we're at 32 months since we've seen a 10% correction. What do you do? Why should I care?
Well, you should care because Miss Yellen actually this week said that she felt that we had overvalued markets in both the biotech,
this week.
The biotech sector, and also the social networking, social media sector. And it's the first time since irrational exuberance that since Greenspan said in 1996, have you had a Fed chairman talk about the markets? So she's trying to jawbone down the markets. And what it means is what you and I have talked about. She's concerned about valuations, and as a consumer, it's not a time to get out there and put yourself on the end of that limb when it comes to the markets. I think if we're looking at real items to help with, interest rates could rise. It's time to go. If you're thinking about buying a home, buy a home. Yep. If quite frank, because I think rates are going to rise. The economy
that being mortgage rates, which a couple of weeks ago hit an annual low. So good takeaway here: refinancing a mortgage, buying a house.
And be careful with your bond portfolio. I'm telling you, for every 1% increase in interest rates on the 10-year bond is about an 8% loss in a portfolio. So if you have 10-year bonds in your portfolio, which many people do, I review portfolios every day, you're talking 16% plus loss in principal. And educating clients on that is difficult because they're not used to that because they've seen rates fall for the last 30 years. And we're now on the other end of that. So watch out for your portfolio, watch out for rising interest rates because you could have losses in your bond portfolio as well.
Yeah, I think a review would be a smart thing to do. And this is something that David offers on our radio show all the time. And certainly here today, if you visit reyesplan.com, he can get you a free financial review and just look out for some of these potential bombshells that exist within your retirement plan, your investment, your strategy overall. Tell us about your book. So you have a new book. Is this thing come to market yet?
It will be out. It's called Successonomics. I was very fortunate to be able to write a book with Mr. Steve Forbes, along with some other authors. It comes out in November of this year, so we're very excited about it.
So it's not out yet.
It's in production right now. So
the cover's there.
Oh, there we go. There we go. Yeah, there I am. Uh-oh. So no, we're excited about it. It's a compilation of a lot of bright minds, and I was fortunate enough to tag along, and I'm excited about the book. So it'll be out in November.
I'd love it if you guys could flash it up for us again, because we're going to give out some free books for when they're ready to be released from David Reyes. Hopefully you can ink them as well.
That's right. That's right.
Keep in mind, he's a big radio show host here on KFB on Sunday mornings, and he's a good friend of this show and certainly our radio show on KCBQ as well. So get that free book. I wanted to have you stick around. We're going to ask for an email to come up here from craigsewing.com, hoping you can help me with it. Craig, love the radio show. And now the TV show, with the market due for a correction, doesn't make sense to buy gold. David, I'm going to put this one on you. Now, you hear that a lot. You see a lot of commercials about buying gold.
Yeah.
Is this like attorneys telling you, hey, if you've broken your back at work, you need to call me? I mean, is it one of those things? You're seeing buy gold, a lot of commercials, and I think the hype is always concerning, but gold can obviously be a good play in someone's plan.
Yeah, well, gold's lost like 20% in the last couple of years, last year and a half.
Yep.
And gold, unfortunately, does not do well in rising interest rate markets. So I would say that would not be a safe haven. There's no yield to gold, right?
Yep.
So as you have the risk-free rates of return, which is treasuries, as treasury interest rates rise, typically gold price will go down because somebody would rather own a bond, let's say at 5%, that's guaranteed backed by the federal government, than gold. Because gold is speculative. It's part of the kind of the greater fool theory, right? The market is for the next person that wants to pay for that next price in gold.
Right.
So, really, if I was going to pick a metal, it would probably be silver. If the economy really is going to improve, silver is a metal that's actually used for producing stuff. Copper. Copper prices have gone way up in the last couple of months, which is a good sign of the economy. So if I was going to be in the commodity space, the metal space, gold probably would not be where I would be, but I'm not a gold bug, so I'm not the expert on that. But I can tell you that
everybody likes gold. The question is does it make a good investment?
Yes.
I'm sure all the housewives that are watching right now, they're like, why don't you like gold?
Yeah, well, like the way it looks.
Encouraging my husband to give me a nice anniversary gift. Great information, David Reyes. Thank you so much.
Thank you.
If you want to get his book or you want to get a review of your financial plan, go to reyesplan.com. His website is right there. I hope you go there. Learn more about his radio show and everything he has going on. Really great friend of the show and obviously a wealth of knowledge, pun intended. All right, coming up, we're going to get into the real estate market. We're going to talk about luxury real estate, also tax planning and estate planning with Pete Middleton and Doug Jennings. You're watching The American Dream. Back here in just a moment.